Good morning, ladies and gentlemen. It is just now coming on 4:24 a.m. over on the East Coast. We do have a little bit of a busy day today, but I wouldn't really call it busy. We've got retail sales, jobless claims, Philly Fed Business Index, New York Fed manufacturing. You've got import prices, retail sales. I already said that. And that is pretty much it. You've got a 4-week auction at 11:30, and at 1:15 in the afternoon, Fed's Waller is going to be speaking. So, very quickly, because I am going to be leaving towards the end of today's trading session to make my trip over there to Borneo. Yesterday, very quick, go over on the S&P, 23-point gap up, 46-point range, closed green, very obvious. We are up 2.87% for the month, 5.38% year to date. Range is getting better, and I'm going to highlight this 50.2683. A close above 50.2683, and you will get your sixth consecutive green week in a row, which will be 15 green weeks out of the last 16, which, like I showed before, had not happened since the Grateful Dead invaded the United Kingdom back prior to when I was born. Streaks like this are, call it what you want, leave it alone. On the SPX spreads early in the morning, and I will pull it up here on the spreads. Yep. At early in the morning, you were getting 240 right at the open on the 49.90, 49.85 risk calls over there. And I typed this in wrong. I'm going to have to go over there and fix that. 10:30, after we had that little bounce, 49.90, 49.85s, we're getting 3. And then right there at 11 o'clock, as I said, the 10-day moving average is here. If you want to scalp these off, your 49.90, 49.85s are down to $1.20. Your 5,000s are down to 50 cents. Those were at $1.50 at the time. And the purpose for this was both because, as I mentioned here 2 minutes later, the 10-day moving average had been hit, and VIX had just hit that 1510 mark. So under $1 and under 30 cents at the moment on both of those spreads, a good time to take that off. The last message I posted in the spread room was that because we're above the 10-day moving average, the FOMO play is going to be for the 5-day moving average, which has not been touched yet, which at the time was down at 49.95. I believe that was similar, as I posted here at 11:41 in the morning. 5-day moving average hasn't been hit yet at 49.95. At 2 p.m., the 0 DTE addicts room should be popping, so watch for it in 2 hours. Now, in the meantime, in the morning, the plays were on the puts because that was what the morning had. You had your 49.45 puts, 235. They made it to 360. They made it to $4. Boom. You had later on the gun to my head when somebody was asking, we're going to go to minus 49.60. We did. The 49.20 puts were $1. They went to $1.50. I don't know whether or not they surpassed that. I was on a phone call with what's going on with Glacier, and I had another opportunity to speak with Dan Marino. So the final hour of trading, I was not there. Thus, because from about 2 o'clock, 2:30, from about 2 o'clock, I was busy with Glacier. I was not able to say unzip, aim, fire, shake, zip back up. And your 0 DTE 45.95 calls had gone down to 30 cents. When I mentioned it at 2:33 in one of the rooms, I don't know which room it is, just fractioning here. Yeah, 2 o'clock, the FOMO into your veins, 233 showing here. Flip a coin, you've got fractionally higher odds at getting 49.85 plus. We wound up closing, and I'll show you here. This is my detailed chart, so I will take you off of the detailed chart because I was asked this, and this is something that you've already seen, you've already heard it discussed, you've already seen it traded, I want to say 100 times. But people forget how to tie your shoes, how to, properly pick your nose in public. In blue is the 10-day moving average. In white is the 5-day moving average. Now, these move intraday. I believe at one point the 5-day moving average was down at 49.44 or 49.94, 49.96. And I believe it was when we were down here on the lows, right around 12 o'clock. 5-day moving averages, when you are above, and let me see if I can bring this out a little bit further. 5-day 30. I hope this chart is not detailed. Okay, it's not. So 5-day, 5-minute. When you are above the 5-day moving average, you are not breaking down below that. That's just the end of it, period, the end. Any dip that you get, as you can see here, back on February 5th, any dip that you get when you are above it, it is your support. As you break above it, it then starts to, while you are above it, it is your support. When you do break below it, it rarely will occur intraday. So as it has occurred, it now becomes your resistance and thus your magnet. You can go back on this as many years as you want to. When you are in this bullish momentum wave level, that is how it plays out. And that was why the 49.95 was the attention for yesterday. Now, what you need to remember is that if you are going to be a day trader, you got to put in the effort and you got to do the homework and you got to remember these things. Fractional gap unfilled. Color code it, make it darker red so that it's easy to see. Here we are having dropped down very aggressively and very intently, talked about being oversold, very intently talked about yesterday how we did damage, but we didn't do anything. We didn't break 49.18. And having discussed over there about when you get a minus 1% day, they have been being followed by not just one, but 2 plus 1% days. Yesterday, you missed plus 1%. Sorry, 5,252, 5,270. You missed it by 18 points. What some aren't really seeing because they're not really watching around and looking around at everything is yesterday, SQQQ and SOX were the two most actively traded tickers out there. Call it what you want. So 5,270. Again, coming over onto the QQQ. And Daniel, I got nothing against you, man. I don't. I haven't had a chance to speak with you yet, but as you were talking about upside for the QQQ, and I wanted to reiterate that we had mentioned 431.61 multiple times during the day, in the email, in the video. That would be where, if you wanted to get into a one-day call position, that would be your upside. You made it past it. You made it to 433.65. We had already hit plus 1% intraday. Bring you back here into where we're at. Here's your SPY and your overnight. Almost filled your gap. Here's your QQQ. So I'll take us off of the wider week-to-date view and go on just to the intraday as to where we were yesterday. And I recall Actually, I'd have to look at it, but anyway, you were asking about where, and this is why I was saying the 431.61. And as you see, as we went into that at 1:30, 1:40 in the afternoon, we rejected it and we sold back off. And you actually sold back off, as you can see here, to a lower low at 208 compared to your low here at 1 o'clock. And then you went into your close. Because why did you make this room over here on your QQQ? Well, the reason for that is because you are going to get the 5-day moving average over on the SPX hit. Doesn't matter what they need to do, they are going to hit that. So, last but not least, as SPY has surfaced up here, you are above the CPI drop. You are above the CPI drop. We were already going down overnight, but from the CPI announcement, you are above it being 499.62. QQQ, let's zoom it out here into the week to date, and QQQ, once again, you are above the CPI announcement, which is here at 433. Well up above it, big gap up. Wouldn't call it a big gap up, but you have your gap up. So this is Apple, and because when you get slow, you don't sit there and look for little things to, where can I get a trade? Where can I push a button? Where can I do this? So I jumped on my Apple. I wanted to update my Apple, and you see Apple here at 182.46. I'll zoom out in a minute to show you here a little bit about Apple. What you don't see is that here in yellow is the 200-day moving average, which Apple is below. In green, the 100-day moving average, which Apple is below. The 5-day, the 10-day, the 20-day, the 50-day, which Apple is below. This is this is a 186-hour chart, so I can see it on here. This 182.46 is a 50 retracement going back down to the October lows. Now, should this play out the way that it is looking to, we should be looking at Apple as breaking below 182, more importantly, breaking below this 179.50 area. Apple is very likely to start heading down to around 174, very possible down to around 168. So if Apple is going to take that turn in that direction, it's going to be very difficult for the QQQ and the chips to maintain the level which they have been at. And the reason why we were up yesterday was because of the chips. So today is Thursday. Today is the day before OPEX Friday. There are two clues that are at the very, very, very top of the email today that I want you to not forget. Don't forget them. And very, very much enjoy your 3-day weekend. Enjoy OPEX Friday. I will be active in the room for the better portion of the morning and possibly a little bit into the afternoon. And then from there, I'm heading to the airport, and I will catch you guys in the course of 3 or 4 days after I've returned.
There was another thing that my good friend Jim Chanos, who we spoke to last week down at the conference, he mentioned that, the company NVIDIA, and it's detailed in this article also and in this Barclays note, that they've made like 24 VC investments in the NVIDIA space, where those companies, they take the capital and then they're buying the GPUs, and the GPUs are serving as collateral for the capital. And we saw that at the turn of the century, right? So this is not going to end particularly well. You can't go up $750 billion in a straight line on not much news, Tim, not much company-specific news, and not think that it has the potential to go the other way just as violently.